on time, and everybody else can miss a little bit, but you guys aren't going to. So welcome everybody. I'm Cecile and I'm the coordinator of the Maji Center at NAIT. At NAIT, we honor and acknowledge that the land on which we learn, work, and live is Treaty 6 territory. This place is a traditional homeland for the First Nations and Métis peoples, and today we are all part of this treaty land. The traditional name for this place is Amiskwachiwaskikan, which we also call the City of Edmonton. There's a long history that has brought us to be on this land, and at NAIT we seek to learn from that history and the lessons that have come before us, and to draw on the wisdom of Canada's First Peoples who have lived on this land from time immemorial. Through this land acknowledgement, we have an opportunity and a responsibility to reflect on the impacts of colonialism historically and currently, and only through learning can we move forward in truth and reconciliation and to a better future together. I'm really, really happy to have Meagan Schroder joining us today. Meagan is a NAIT alum. She completed her program at the J.R. Shaw School of Business. I'm not going to say when. And she started her career with the CRA. So she is really an authority on taxes and business taxes. Meagan is also proud Indigenous, has proud Indigenous heritage. As a member of the Big Stone Cree Nation, located more than 300 kilometers north of Edmonton, Meagan continually finds ways to support Indigenous communities, and she is an advocate for small business and enjoys sharing her firsthand knowledge of what it takes to start and grow a business. So I'm going to hand it over to you, Meagan, and I'm going to put myself on mute. Everybody, if you have questions, you can put them in the chat. And then after, we'll have time for you to turn your mics off, unmute them and ask. Okay. Over to you, Meagan.
Okay, perfect. Thank you so much for the lovely introduction. Thank you everyone for attending today. I'm very excited to share the presentation with you guys. As mentioned, I really love helping small businesses and especially the startups. I worked usually with startups all the way up to medium-sized businesses, but those startup small businesses are definitely my passion. So today I'm going to talk a little bit about some things you can expect tax-wise, bookkeeping-wise, when starting your business. So I'm going to share my presentation here. And I hope everyone can see that here. So today we will be talking about business taxes, tips, and strategies. As mentioned, my name is Meagan Schroder. I currently own an accounting practice here in Edmonton called Roth Schroeder Professional Corporation. So I am a designated chartered professional accountant, and I am a proud Nihiau Iskyu, and what that translates to is a Cree woman. As mentioned, I own this boutique accounting firm. We like to designate ourselves as boutique because we feel that our practice offers more than the traditional typical accounting practices. So we offer things such as CFO services, controllership services, but we also, as mentioned, my passion is working with the smaller startups with bookkeeping, year ends, tax preparation, and we also work with clients that are going through audits with the Canada Revenue Agency. So as mentioned, I am a former CRA auditor. So I used to audit small, medium-sized, and even larger size businesses. So now I'm working on the other side, helping my clients through those audits. And to date, we've overturned well over $1 million in assessments made by the CRA. So we're very proud of our practice, and I'm very proud to share a little bit about it with you guys and to share what I've learned over the years. So here's a little overview of what we'll be discussing today. So we will go over just the different business structures, but I'm really just going to focus on sole proprietorships and incorporations. Just to give a little overview for those that are unfamiliar with the differences between the two. And then next we'll move on to taxes, and I'll give you a small little crash course in all the different types of taxes and accounts that you as a business owner may be required to register for and perhaps file returns for as well. And then we will look at some different ways that you can maximize your deductions on your tax return. And just to give you an idea of some other items that may potentially cause some issue with the CRA. So there's a lot of gray issue when it comes to taxes. So I like to cover some of the more common ones. And then the next topic is ditch the shoebox. So I will explain some ways that you can keep some clean records, and hopefully this will actually help you to save money at the end of the year when you take your books to an accountant to prepare your year end. And then the last slide, we'll just be talking about a few more resources and tips and some strategies and things that I use in my business daily that honestly I just can't live without. Okay, so the two different business structures that I wanted to talk about is sole proprietorship and corporation, just because those are the ones that I deal with mostly. There is something kind of in between called a partnership, but I've had my business for about 8 years and I've never encountered a partnership. So I figured I would just discuss these two, but happy to take questions at the end if a partnership is something that you are looking at. So as a sole proprietor, one of the main differences is that it is not a legal entity. So your business is you, and that business is actually reported on your personal tax return. So the business activities go onto your personal tax return. And so really what that means is that you are taxed at the personal progressive rate. So I do see some people that are sole proprietors and they've made $300,000, but they're pretty good with their money, and they're actually only utilizing maybe $100,000 for their personal finances, for their personal living. And at that point, I really would recommend them to incorporate, because they are now being taxed at the highest personal tax rate when they only really need $100,000. So that remaining profits, the remaining 200,000, is taxed at a lower tax rate within a corporation. So every situation is different. I'm not saying everybody should run out and incorporate. I think a sole proprietorship is actually really great when you have other sources of income, especially when the sole proprietor is not your main source of income. And the reason for that is that a sole proprietorship, that the income, net loss does get applied to your overall income. So let's say your sole proprietorship actually suffered a loss of, say, $10,000, and you had employment income of $40,000. Well, that loss is going to offset your overall income for the year. So I really think that is a good structure when you're starting out and still, figuring out your business and getting going, and maybe your sales aren't as high. Sole proprietorship is great. Another drawback is there is a lack of continuity, because when you're something, if you end your business or something happens to you, your business essentially ends. Now, whereas with a corporation, that can continue on because the corporation is a separate legal entity from the individual. So what do I mean by the corporation being a separate legal entity? I almost like to say it's its own person. It has its own filing obligations, and it can enter into contracts as the corporation itself. Another good benefit of a corporation is that you do have more options for your tax planning structures. Rather than, as an employee, you get paid a salary, whereas with a corporation, you have the option of paying yourself in dividends. You can take a shareholder loan from the company, which can deflect taxes for about a year before you need to maybe take that shareholder loan into your income or repay it back to the company. So if you need a little bit of breathing room for a year, there's that opportunity for you. However, you need to keep in mind that there are also some added costs with a corporation, because there is going to be more filing obligations. There's the corporate tax return, but in addition to that, you do need to file an annual return with the Alberta Registry. And that's really just to keep your company active within the Alberta Registry for the corporation. And if you don't file that return, after, I believe it's 3 years, they will strike you from the registry, and then you need to go through a revival process, so on and so forth. It just adds a lot more headache and a lot more cost to you. So ideally, you should be filing that return every year, but obviously it is another obligation that you have, whereas with a sole proprietorship, you would not have that filing requirement. So definitely look at the differences and see what would work best for you in your situation and timing. And just because you start out as a sole proprietor, that doesn't mean that you can't become a corporation later on. It's always easier though if as a sole proprietor, you're not bringing in a lot of assets into the corporation, because that may require some additional filing requirements as you're incorporating. Definitely can still be done. It's just a little bit complicated, and you should definitely seek the help of an accountant in those situations. But again, don't run away from the idea of a corporation if you're not ready for it yet. The idea is that hopefully eventually your business will grow to the point where a corporation is necessary. So moving on, the next topic is taxes, and honestly, one of the biggest surprises I find a lot of small business owners or new entrepreneurs realize when they're starting their company is just how many tax accounts are needed when you are starting. So there's the federal tax filings, there's provincial tax filings. So I'm going to go through each one individually and explain them a little bit more. So the first one, we call it's the indicator is RC, and that's your corporate tax account. So obviously this is for persons that have a corporation. And the RC account would basically be created when you create that corporation. The way these accounts are created now is when you incorporate within Alberta, you're actually given your business number with CRA right away. So your RC account would actually be created. And at that time, you would also designate whether you need any of these other accounts, which we will get into. But from the starting process right now, when you incorporate within Alberta, this RC indicator account is created for you. So think of it again as the corporation is its own person. It needs to file its own tax return. And that's what the RC account is. And that's obviously, yeah, where we file the corporate tax returns for the organization. Now, for the corporate tax return, when we think about due dates, we have the opportunity as a corporation to choose our year-end date. We don't have to choose a December 31 year-end date. And you would actually indicate or choose that date on your first filing. So your year-end could be July 31, January 31. It's really completely up to you. What you need to understand is what is your filing deadline. So typically for a small business, you have 6 months from your year-end date to file that corporate tax return. However, if taxes are owed, you generally are required to pay those within 3 months from your fiscal year end. If you've prepaid your taxes and you file your return after the 3 months, then you shouldn't have any interest or penalties to worry about. But generally, like in my practice, I tend to want to get my clients' returns done within the 3-month period so they know what they need to pay, if anything, and then we move forward. But you do actually have 6 months from the year-end date to file as a small business. And if you are in a loss or if you have losses to be applied, then you don't really need to worry about any late filing penalties or anything like that, because penalties are based on what your tax owing is. And so for the next account, it's called an RT account, but it's known as the GST account. And this, again, this could actually be a corporation could have an RT account, and a sole proprietorship could as well. Now, all of these accounts, RC, RT, RP, if you have all three of those accounts, they're all going to have the same number. It's just the indicator of RC, RT, RP is going to designate which account you are filing under or which one you're looking at. So don't feel like you need to you don't need to remember all these different account numbers, because it is just one account number typically. in most situations. You can designate other ones, but we won't get into that. For the most part, you will just have one business number with the CRA for all of these different accounts. So going back to the GST account, obviously this is where we're going to file our GST returns, and your filing requirements could vary from monthly, quarterly, or annually, and it really does depend on the size of your business. Usually CRA will designate you as an annual filer when you first set everything up. But as your business grows and you're generating more taxable sales, the CRA may actually want you to file quarterly. So definitely don't ignore the notices from CRA. I find a lot of clients of mine do that. You know, you get the brown envelope in the mail and they just toss it to the side. But really, it's very important that you pay attention to those, because if you are designated to then file quarterly and you've been filing annually, well, usually what happens is the client comes in once a year and not realizing they're now behind about 3 tax returns, and we're facing penalties. So be very careful when setting up all these accounts to know exactly what your filing requirements are. When do you need to file? And reaching out to your accountant or tax professional, or even just calling the CRA to see what those obligations are. And if you do access your online account with CRA, all of that will be outlined there for GST, what your expected returns are. Another thing to keep in mind with GST, you could be designated a small supplier, and basically what that means is your sales being under $30,000 within 4 consecutive quarters. You don't have to actually remit GST or charge GST to your clients or customers. It's really up to you if you choose to be a small supplier, because you could be making $10,000 and you could still register for GST. What I say is, as a business owner, you're probably wanting, your goal is to, you know, have larger sales. So eventually you're gonna hit that threshold where you do need to register. So I always recommend you might as well just do it right from the start. GST is something you add on to your sale price, and that's paid by your client. You're just simply collecting taxes for the government and remitting it. And any expenses that you pay GST on, you can apply against your GST, obviously. So that's just something to keep in mind, that if your sales are under 30,000, you may not have to register for GST. The next topic is payroll. So basically, this is where if you have employees or you pay yourself a salary, a bonus, this is where you would remit those taxes to. So you may know as an employee that your employer is deducting CPP, EI, and income taxes off of your paychecks whenever you're paid, and this is then being remitted to the government on your behalf. So at the end of the year, you do your tax return, and your T4 is going to show all those taxes you've prepaid. As the employer, you are responsible for deducting and remitting those taxes of employees. And if you're a sole owner or manager and just paying yourself a salary, you still are required to remit those as well. So what are the filing requirements? Generally, they're monthly. So if you pay anything, say for the month of May, anything you pay in the month of May to employees or yourself, any taxes deducted are then due by June 15th in this example. So again, it's very important to understand and know what your filing requirements are. The CRA takes great offense to payroll taxes not being remitted on time. So because this really is not your money, this is money earned by your employees or by yourself that then is being deducted. And if you don't remit that to the government, they get quite offended by that, and the penalties are quite stiff. So I highly recommend that you pay attention to all filing deadlines and requirements, but payroll especially is something you don't want to fall behind on. In addition to your remittances for payroll, you actually do still have to file a T4 return for all of your employees, and that comes at the end of the year. So that's not just issuing your employees a T4, you actually have to file a T4 return with the CRA. So it's very important that you do that before February 28th of each year. Okay, so Then there's some other tax accounts. There's one called RZ, and again, this is more of a corporate tax account, and this is for corporations that choose to pay their shareholders dividends. So in that case, they need to then register for an RZ account, and all these accounts can pretty much be set up online very easily and very quickly. I had a client just very recently, we paid out a dividend. He didn't have his dividend account set up. I went and did that within 5 minutes online through CRA's represent a client, but you yourself as a business owner have the opportunity to do that as well. So we also have Alberta corporate tax. So if you are a corporation, you also need to file an Alberta corporate tax return. So as employees, when we file our tax returns at the end of the year, we all just file with CRA. And what CRA does is that little box that shows, what province you live in, they designate a portion of the tax to the provinces based on where you live. So the CRA administers personal taxes, but here in Alberta, we actually administer our own corporate taxes. So there is a filing requirement for Alberta corporate tax returns as well. And the deadlines are the same as the federal corporate tax filings as well. Another consideration is your personal tax return. If you are a corporation, you still have to file your personal tax return, and you're going to report whatever monies that you have taken from the corporation, whether that be salaries, bonuses, dividends. Those are all reportable on your personal tax return. And that is a separate filing from your corporate tax return. So don't just assume your accountant is going to do that for you. You need to let them know, like, hey, I need you to file my personal return as well, because I do find that happening a lot. A lot of people are going to those home-based tax softwares, and we don't have as many personal tax clients anymore, but I still have those few where they're like, hey, did you file my personal tax return? And I have to tell them, well, no, you didn't tell me to. So there's separate filings. Please make sure that you're paying attention to that as well. And then you also want to pay attention to any sales outside of Alberta and Canada. You may have some filing requirements, and I'm not really going to get into that because my focus and my practice is pretty much Alberta, but we do know that BC has its own sales tax that they administer as a province. So it's not a federally administered tax. That's something that the province itself administers. And there may be some filing requirements for you as a business if you are providing sales to that province. And same with if you're providing sales, there's a lot of online businesses if you're providing sales to a client or a customer outside of Canada. So definitely check what those requirements are. A lot of these online shopping platforms will provide you with those details. So just definitely pay attention there. Okay, maximizing our deductions. So this is probably what a lot of people are interested in. And really the basics here is that any expense incurred to earn business income can be tax deductible. I don't want that to be taken as the one end all be all, because we know that tax can be gray and there's all sorts of different situations. But generally, this is the main rule. If you can attribute it back to earning income, it will be tax deductible. There are some where there are limitations. So meals and entertainment is actually clawed back by 50%. The government feels that there is a personal benefit to taking a client out to dinner, and that only 50% of the actual expense should be tax deductible. So those are typically clawed back within the tax return the way the softwares are now anyway. As soon as you enter it on that line, it's gonna take 50% of it away. But be careful with your GST, because for GST purposes, when you're claiming GST, $100 meal expense, we're looking at like $5 in GST. Only half of that is claimable on your GST return, and that's something a lot of people often forget about clawing back when doing their GST returns. So be careful of that. But some of the forgotten expenses that I find a lot of clients don't really think about is those ones that have a personal component and a business component. So these would be your home office expenses. If you work out of your home, which a lot of us do, especially within the last couple of years, is you probably have a little space within your home and you are eligible to claim a portion of your home expenses then. So that would be, if you own your home, property taxes, insurance, interest on your mortgage, internet, telephone, and anything that you can directly attribute to the office itself. If you bought a desk, a laptop, anything like that. So be certain that you are including those when talking to your accountant or when providing them the information. Usually we'll ask, but a lot of times, if I get a cell phone bill, I assume that, or sorry, an internet bill, I assume that there's some other services in there as well. So it's really important to have the discussion with your accountant. And the other one to think about is your mileage for your vehicle, ensuring that you're claiming a portion that you can attribute back to your business. And this is where my former audit skills come into play, and I really hope that you're all keeping a mileage log, because every time I audited someone, it's the first thing we looked at, and it would probably be the first thing that we deny, because almost everybody does not keep a mileage log. So there's so many apps nowadays, there's no reason why we can't track our mileage to determine when we're using our vehicle for business. So definitely don't forget about those items. And as a corporation, I really feel that you need to be careful with some of these deductions that you may claim in the business that have that personal component. Because when there's a personal benefit, there's and if you're writing the entirety off, the whole expense, and the CRA comes in and recognizes that as, you know what, some of that is personal, they will remove it from the corporation as an expense, and then they'll also tax the shareholder for taxable benefit. So it's almost like you're being hit twice in those situations. So be very careful. Again, talk to your accountant. Basically, if you feel that this has a personal benefit but a business one, have that discussion, and always proceed with caution. So just remember that if there's a personal component in that expense, that you really need to think about how much of this is business, how much of this is personal, and be very reasonable. Because there are some people that they seem to deem these transactions as business when there's no way that they could be. I've had clients try and claim their kids' trampolines and vacations, saying, well, I talked business while I was there. And, I'm sure you did. We all do. I do it too. But that doesn't deem my trip to Mexico a business expense. I'm sorry. I wish it was. It's just that's not how it works. So there are some people that will knowingly take advantage of the tax system. And in those situations, the CRA obviously is not happy, and they will assess some pretty hefty penalties if they find that you were negligent in that aspect. A couple other things to be aware of is when you're transferring any properties between yourself and your corporation. So let's say the corporation has a piece of land and you figure, you know what, I want to transfer that into my personal name. You need to do so at fair market value. Otherwise, the government is going to come in and they're going to assess the difference anyway. So it's very, again, like, please don't take advantage of the tax system, because the CRA does have ways of finding out. So definitely just always err on the side of caution, have those discussions with your accountant. Anytime there's a transaction that's not at arm's length, anytime there's a transaction not at arm's length, we need to be careful because those are ones that are more of the personal nature. So our next slide is talking about bookkeeping and how can we keep good records within our business. And I really, being the kind of work that I do, the way you can really save money at year end is by keeping good records throughout the year. So you can implement some sort of do-it-yourself income and expense tracking. And the first step, I think, is to really just develop a good process that works for you within your company. So think about, like, how am I going to invoice my clients, or how am I going to accept payments from my customers? It's all dependent on if you're a product-based or service-based company, but think about that process and the steps to get through it from the time you make that sale to delivery, accepting payment, or invoicing. So once you have those processes developed, kind of in your head, maybe think about different softwares or different ways that you can make that easier for you as a business owner. And when it comes to expenses, it's the same, it's I guess the same thing is think of the process. When you go and pay for something at the store, how are you going to pay for it? Are you going to use a credit card? Are you going to use a bank card? Maybe you're purchasing inventory, so you have an account with the wholesaler or the vendor, and so then you're getting a bill. So there's a difference between paying at the store and then getting a bill and paying it later, right? So how are you going to deal with all of those? And how are you going to get them into a system? Once you've figured out your process, we can talk about softwares. Obviously, QuickBooks Online is one that I use within my firm, and I recommend. But there's other ones for that a lot of my clients use as well, called FreshBooks. There's Zero. There's all kinds of them. But really, do your research. See which ones may work for you the best. Develop your process and be consistent with that process. You want to make sure that you are, when you enter a bill, you're entering the same details for each bill. You should always have a date, you should have a description, obviously the amount, GST considerations. So just being consistent and always maybe making it a schedule as to when you're entering the invoices or doing your invoicing. When are you entering your expenses? Maybe on Fridays, that's when you do your expenses, and Mondays are when you do your invoicing to your clients. But always don't leave your books till the last minute. There's so many people, they leave it till year end and they're all scrambling and they're digging for their receipts, and that's when things get missed. And as a business owner, we really want to take advantage of every single deduction we can. So just figure out a process where you can keep things organized. I highly recommend, if you can, do a software, even if you do a spreadsheet, right? But the details that you want to have in there for your expenses is the date, the amount, the description, and perhaps the digital copy of the receipt. And we'll talk about ways to help you guys with that as well. But I just want to just make sure you have a process in place and that you're going to follow that throughout your bookkeeping process. And also definitely keep your business and personal expenses separate. It gets messy when you're using your business card to pay for personal transactions. It causes more work for the accountant at the end of the year, which then causes a higher accounting bill for you. So really, just if you have to, whatever it is that you need to transfer out to yourself once a month, twice a month, just do that singular transfer and do your personal spending from your personal account, do all your business from one account. That way, everything going through this account is business, and you're not sitting there having to sort it out at the end of the year. So if you were to develop a process and you were to be consistent with entering everything and invoicing your clients, or accepting of the payments, you should then, at the end, as long as you're consistent with that, you should be able to generate reports fairly regularly. And the reason why we want to is because this gives us the opportunity to maybe find things that don't look quite right in our books. So if there's expenses that are uncategorized, a famous account that my clients use is just called an uncategorized expense. Well, we always need to categorize it to something, right? The government doesn't like it when we claim uncategorized because that just causes flags. So maybe, your staples expenses go into office supplies, right? Try and designate all your different expenses into a specific category. So when you review your reports, you know exactly where you spent your monies. You can take a better assessment of the financial health of your company because you know where everything was spent and you know how much money you made. And that's why it's important, again, to be consistent in getting our bookkeeping done, is so that we can really assess where our company is at. Can we make those purchases? Do we need to cut back on something? Do we need to maybe extend our payment terms, whether with suppliers, or maybe we need to draw back with our customers? Maybe we offer them 30 days, but now we need to do 15, right? So that's why it's important to really keep an eye on your business, not just at year end, but throughout the year. And I think if you really develop this, kind of do it yourself bookkeeping, and even if it's something you just do on your own and you still have the account at the end of the year figured out, but I think you'll be more successful in your business if you know exactly what's going on throughout the year. The other item I'd like to go over is different apps to take advantage of. Apps are so amazing nowadays. So earlier I was, talking about how we can enter our receipts, and there's so many apps that can manage that for us, right? So we can just simply take a picture of a receipt, and the app is actually going to read the supplier name, it's going to read the date, the amount, the GST. All you need to do is tell that app what category of expense it should be. And they'll even start to recognize that Staples is, an office expense, Starbucks is meals and entertainment. So those apps, honestly, if you even just use those receipt management apps for expense reporting and provide that list to your accountant at the end of the year, it's probably going to save you a ton of money because your accountant is not going to have to sort through paperwork, right? They have this nice expense report. All the receipts itself are managed within the app, so there's a digital copy of them. So you can literally give that expense report, so long as you're putting everything in that app that is business. You can provide that expense report directly to your accountant, and it would just save a lot of time and money. There's also accounts receivable automation. So this is something I use in my firm. I basically have an automated accounts receivable clerk collecting for me, because as soon as I send my bills out, it goes into this app, it sends it to the client. They have the option to pay it right then and there. But if they don't pay it, they actually get a reminder that's completely automated a couple days before the due date. And then when it goes past due, they will get another reminder saying your invoice is past due. And then the great part about it is that it actually charges the late fee directly into my accounting system, which is QuickBooks. So I have this application doing all this work for me that I literally don't need to even go in and accept payments, because as soon as my client pays the invoice, it actually links back to my software and records the payment in my books for me. So this saves a ton of time on my part, even as an accountant, right? It saves me a ton of time. So for you as a small business owner that accounting isn't really your thing, these are things you can use to help you manage your company and save a lot of time. And that's really, for me, what I love to work with my clients is how can we save you time? Using these apps is a great way to do so. There's different integrations you can have with your accounting software for inventory, or maybe your customer relationship management software. It can sync into QuickBooks. There's all sorts of different ones you can use for payroll as well. There's mileage trackers. You can link those back into your softwares too. Time tracking softwares. We use one for our employees, mainly just for HR purposes, to know when they came into the office and how much time was spent. But you could also use this for invoicing clients as well, because I know the one we use, T-Sheets, you can actually attribute it directly back to a client. So this could help you with your billing process as well. So every business is different. There's so many options out there. I really encourage you guys to look into all these different ideas to help you better run your business so that you can focus on what you do best. Okay, so this next slide is just kind of going over some resources and tips and strategies. So some good resources that a lot of my clients have used are the BDC, which is obviously the Business Development Bank of Canada. They work a lot with entrepreneurs, so they do have a lot of financing. They do advising as well for entrepreneurs. So definitely check them out. There's the Business Link of Edmonton. They have a lot of resources. They do a lot of sessions as well. MentorWorks, I like MentorWorks because even though they do grant writing, I like that they kind of outline all the different grants available to small businesses as well. So maybe you don't use their services, but you can definitely use, those resources there to see what grants are available. And Futurepreneur is another one that helps with, they provide some financing and advisory for entrepreneurs as well. The next topic is cash flow. And the reason I want to talk about this is because managing your cash flow is just as important as making sure your company's profitable. Because net profits, if you have good, healthy profits, does not mean that you have a healthy cash flow. And that's because you could post, I had a client that posted $8 million in profits, and they had horrible, horrible negative cash flow that almost put them into bankruptcy. And the reason is because they were purchasing large amounts of heavy equipment. So they're paying $200,000, $300,000, all of these large amounts, and it's draining the cash. And then it comes a time where you literally have no cash. So yes, you had profits, but you're using all your cash to buy these large assets. So in those types of situations, that's when you really do want to look at, maybe you have the cash, but it may be more ideal to take out a loan, right? Because you don't want to ever be in a spot where, like, you always want to have a backup of cash in case you come to those slow seasons or something happens in your industry and the sales decline. You need to have the cash to back you up to get you through that. And unfortunately, this client of mine did not. So, we're 5 years later and they're still recovering. So they were doing fantastic for years, and this really hurt them. So definitely something to keep an eye on. Managing your AR, your accounts receivable, and your AP, which is your accounts payable, efficiently. Get paid as fast as you can, but extend those bill payments as far as you can, right? I'm not saying be delinquent. I'm saying if you don't have to pay that bill for 30 days, then don't pay it for 30 days, right? Because if you're bringing in your cash sooner and cash is going out later, it's really going to help with your cash cycle. And some ways that you can get paid faster is obviously bill immediately. If you can bill right at your clients, if you're in a service-based industry, as soon as the work is done. I have contractors, like some of my clients working in as subcontractors for home builders, and they're sending their bills before they're even leaving the property, and they're doing that all on an app, right? You are going to get paid faster. The sooner you bill, the sooner you're going to be paid. So make sure you use a logo on your invoices as well. Studies show that people tend to pay faster on those. I'm not sure why. They just like that the invoice looks nice, I suppose. So use nice, easy languages in your invoices so that the client understands exactly what they're paying for. And then they're not calling you asking, well, you just billed me 4 hours and you didn't indicate why, right? As long as you're clear and concise, then there shouldn't be questions. You're gonna get paid faster. And also just don't invoice on Fridays, because a lot of people, that's not on their mind. And then you're probably, they may forget about it over the weekend. So ideally, you should probably invoice on a Monday, or not directly before a holiday either. So, and obviously accepting online payments, that's making it easier for the client, is always the best, because the easier the way for them to pay, then they're just going to pay a lot quicker, right? I hate it when I have to pay by check. Now I have to go and create a check and I have to send it in the mail. I want to pay online, right? And that's just the way of our world now. Some softwares that I can't live without in my firm here are Ring Central. And so that's my phone system here within my firm. We have a virtual receptionist. We have an inter-office messaging system that I can message my employees directly. We can do virtual meetings. It's really a great software, and we use it every single day, and I couldn't get along without it. Business in a Box is something that I used in the beginning. It's just a software that provided so many different templates and was fantastic, especially for HR to develop some contracts, so on and so forth. Practice management software, just to keep your workflows going, right? And to keep track of everything. It's really important to stay on top of all of that. So maybe do some research on what may work for you. There's things like Asana. I think there's one called Honeybook. There's so many different ones. I encourage you to definitely check those out as well. And I talked about receipt management before. The one I use in my firm, it's called Gst. Again, I like when I go and purchase something at Costco for the firm, I just snap a picture right at the till. I upload it and I throw the receipt out, because now I've got a digital copy of that receipt. It's going to sync into my bookkeeping software, and it's going to attach that receipt directly to the transaction. I don't need to worry about it. It's all there, and the CRA is accepting digital receipts. And the last topic that I'd like to talk about is just really, this is probably where a business plan is very important, is really thinking about your product and service, and what will be included in that. So what I've learned in my business over the years, you know, from where we started to where we are now, we've had to get very detailed over the years as to what's included in our services. Because what happened was then clients had these expectations of all these extras that actually weren't included, but we weren't detailed enough in our contracts. So look at your business practice and what are you offering, and do you need to communicate what exactly is being provided to your client or to your customer? And then what processes do you need to set up your operations? So I think if you do that work ahead of time before you really get into it, you're going to avoid all these bottlenecks once you get into running your business. And certainly we're year 8, we're still figuring things out. And I think that's just the life of a business, right? But I really wish there's some things we had put more thought into it. We started without a practice management software, and then it came like, how do we manage these clients? How do we know whose return is due and when is it due? And so for us, like that was a huge mistake. And now we have a very, very good software, but it was a learning process. So I highly encourage you guys to really think about your business and what you need for it to operate very efficiently. So that concludes my presentation. I'll open the floor for any questions. Sorry, I went a bit longer than expected. I guess I love to talk about tax. I just can't stop. So
Okay, there are some questions in the chat I thought we should hit up first. And the first one was from Ash, and he was asking if under 30,000 net for GST revenues, sales, is that gross or net?
that would be gross. So before expenses.
Okay, and then Catherine, I think, was the next one to ask a question. If she recently bought a new car and is using it for her business, can she claim some of the expenses associated with that, like the interest or the car payments or anything like that? That's what she's asking.
Yeah, absolutely. You can. There's a specific calculation that needs to be done because there's a limitation on how much you can claim on vehicles. Again, a conversation to have with your accountant, but you can definitely claim a portion of those motor vehicle expenses, including the interest on your lease or your purchase. Just make sure you have that agreement, like the finance agreement, handy for when you go to your accountant, so that they have everything that they need to do the proper deduction. And obviously making sure you tell them how much of this was business versus personal.
Keisha, do you still have the question about the app? Or did that get answered? Okay, Darlene, is there a typical percentage to claim? She asked for home office. I think Dale answered this already. He said it was based on the space that your office used of your home. So
yeah,
your office is 10% of your home, then 10% of your expenses.
yes, yeah. And usually we'll do like square footage.
Okay, and any other questions? That's it for the chat. So if anybody wants to unmute and ask a question, now is a good time. Oh, we got a hand up. We got a hand up from Carrie.
Hi.
Hi, Megan. Thanks for your talk. My question is I'm a massage therapist, and in the last 2 years, I haven't done any massage because of COVID, but I'm still paying my association dues. Can I still write that off even though I'm not making any money in my business?
Yeah, I think in this case, if the idea is that there's going to be a continuation of the business, I would certainly feel confident in claiming that. I think where it gets to be an issue is if you're consistently posting years with no sales, then you're gonna have some flags based on your industry, and everyone's aware of COVID. There's an expectation that you wouldn't have sales, but you're still going to have costs in maintaining your business. So I would definitely still claim those.
Thank you.
Okay,
You're
and
welcome.
Darlene, you had your hand up next.
Yeah, just I couldn't catch the name of your receipt management app. It sounded like Dext or something. What is it, Megan?
Yeah, the one I use in the firm is called Dext, and that's DEXT, formerly known as Receipt Bank. I will say that QuickBooks Online does have an app right in their software as well. I just haven't there's some things that Dext has that QuickBooks doesn't. That for me with my clients, I have all my clients on Dext. So the QuickBooks one may work for you, but there's just a little bit more in Dext that works for me and my firm.
Thank you.
You're welcome.
Okay. Tim, you had a question next. You're on mute. Here, I unmuted you. You can go.
I have one question, sir. Like I have an example. I have a product that I sell about $400 for the product, but I ship it by courier. I use courier to ship it, and they charge on the value of the product for the like a insurance fee or something on the shipping cost. And I want to down the cost just about $100 for the value of the product in case. In case loss, the product loss, they will send back to us for the claim just $100 I get back. It's common in domestic, but I wonder if I ship to overseas and if I down the value of the product like $100 and if it hit the custom border from overseas like in the United States, and am I illegal to down the value of the product or not? Because it not only affect to the shipping cost, it's also the border, the custom border. They will based on the product value in the shipping because I shipping. I will use the invoice, shipping invoice, commercial invoice, and they based on that to calculate the price.
So sorry, can you repeat what the exact question was again?
I think you're
Yeah.
wondering about if is it illegal when you are decreasing the value when you're shipping an item by say $100. Like is that illegal? Is that what you're asking, Kim?
Yes, exactly that.
So I guess from I can only speak on like a tax perspective. I'm not really well versed in the legal standpoint. Like, if we're talking customs, like for me, I always like if the value is $400, then that's the value I would put on it. And that's just, I guess, from a tax and customs perspective. But from a legal perspective, I'm not really, I can't really comment on that because I don't really know the rules and laws there.
Okay.
Yeah, actually now like the rule from the United States, if the product value below $800, it will pre-tax for the original country to import. In Canada, it's free for unlimited value. But the CO, I mean the original country from China or somewhere, but Canada export from here to there, but the original of the product from China to the United States, I have to follow the jump rule. They said that jump rule, it means the value just $800 for tax free. If more than that, I have to bear the tax. But it's also affect to the shipping cost, and I want to the value of the product. And I don't know it's illegal in Canada to do that, and for the overseas or not.
Kim, I think that Megan kind of answered this already, that it's probably best business practice to always put the accurate value down, because by trying to avoid these things, you could put yourself in trouble and your business in trouble.
Yeah, absolutely.
Okay, so there's a question in the chat from Tyler. Tyler asks, if I have a business and registration number, does that mean I now am obligated to pay GST if my gross is under $30,000?
It depends if you registered for GST. Now, when you say you have a business number, I wonder if you just have a business number or do you have that GST number as well? So were you registered for GST, so that RT indicator account? Or
No, I don't have a specific GST number.
okay, so you just have like what with your number, it just does it have an RC in front of it? Are you in a corporation?
No, I'm a sole proprietor.
Okay, so if you have a business number, then you probably somehow managed to register for GST. You could look at closing down the GST account. I'd recommend that you call CRA. It's if you have a pen handy, I can give you the number.
Yeah.
It's 1-800-959-5525, and that's the business inquiries line. So you'd have to find out, one, have you like because once you if you have registered for GST and they are expecting returns, you may have to file those nil returns up to that point and up to the point of closing down the account for GST.
Okay.
Yeah. But
Thank you.
essentially, once you register, you are deemed to file GST, and the CRA would be expecting some sort of return, right? So I would give them a call and determine whether you did in fact set up that GST account, and what your filing requirements are, and can you shut it down? Just explain your situation to them.
So, but if he's only registered his business but not registered a GST number, then he's good to go.
Yeah, when
Yeah.
you say registered your business, you mean registered it with CRA or just with Alberta Registry as a name?
Yeah, like I went to the registry and registered the business name, and then it gave me like a business number and a registration number.
Okay, yeah. So it probably did set up something with the CRA. So I would just confirm with the CRA that there is or isn't a GST account.
Dale?
So I know the situation well. So what happened is as soon as Tyler registered his business, they kind of sent him a blank CRA number. And so functionally, it doesn't do anything. It's not attached to GST or anything like that right
Okay.
now, Tyler. If you are going to be collecting more than 30,000 over 4 quarters, you should contact CRA and get that set up. But I wouldn't worry too much about that blank that they set you. It became standard practice about 3 years ago.
Mhm.
Causes a lot of confusion.
It
Okay,
does,
thank
yeah.
you.
We got like 2 minutes. Is there any other questions before we sign off?
Hey, Megan, there's one I've always wanted to know the answer to. If I'm
Yeah.
shipping interprovincially into provinces with a sales tax, is that something that you as an accountant would help to rectify at the end of the year, or is remitting sales tax into different provinces?
Yeah, certainly you should have your accountant look into that and what the filing requirements are. The general rule is the place of supply, right? So where are you supplying to? And then wherever that ends up being, if it's Ontario, then you might be subject to HST. If it's BC, where the product is going, right? Where it gets really gray is with those online digital type products, right? If the sale's made here, but maybe made in New Brunswick or made here, like us as the business, but the end client is in New Brunswick, that's where things get a little bit gray. But certainly, yeah, usually the accountants will help you with those filings.
Awesome. That sounds like we're all good. So right on time. Thank
Yay.
you so much, Megan, for joining us today. It was really,
Yeah.
really informative. And I'm sure it's helping everybody. Just know everybody that you can do a lot to help your business and help your accountant.
Yeah.
save yourselves money and save your selves time as well. So
Exactly. And I just want to say that I am looking to launch a course on something about like shoebox to bookkeeper, not to replace an accountant, but just to really some of the things that I discussed throughout the presentation to help you keep better books throughout the year. So if you're interested, when that launches, shoot me an email and I'll add you to the list for when it does. And yes, the idea is just to really help cut down your year-end accounting fees.
awesome. So thank you, everybody. And thank you again, Megan. Really, really appreciate it. This is our last session until the fall, but in the fall, we kick things off with 4 amazing keynote speakers. We've got Mike Wheeler, CEO of Canadian Brew House. We've got Manita Chapman, Simply Supper. We've got Bill Cara, the founder of Addicting Games, and Ashif Maji, as well as Stephen Brochu of Milk Crate. So some amazing keynote speakers and then some great events coming down the pipe. So I hope to see some of you at them and have a great week.
Awesome. Thanks, everyone. Bye.
Bye-bye.